Well, Titan, as it's started doing a habit, came out with a very good set of numbers. Revenues for the quarter were up about 22% YOY to 9163 versus estimates, which were much lower than estimated. The point is this growth came in on better margins at 13.6%, which led to a good bottom line growth. And the company is guided to, at least spoken about, a strong month of October because of the festive season. Let's get in Mr. Ashok Sonthalia. He's the CFO of Titan, joins us right now on the show to try and talk about the pulls, pressures, if any. Well, they have guided to also muted margins, so we want to talk about that. So some pressures, but mainly the pulls. Mr. Sonthalia, good having you. Thanks for joining in. Hope all is well.
Thank you. Good morning, Neeraj, and thank you for having me on the show. Everything is fine, and willing to talk to you with our performance and looking forward.
Yeah. So what stood out for you in the quarter? Because clearly it was evident that the growth was strong.
Yeah. So I think what we are seeing that consumer demand is still good, and consumers are wanting to come out, and particularly, we are finding now the physical part of the retail, even the whole online habit continues, the browsing, the research, etc. But final conversion, particularly in jewelry segment, we are seeing more and more again coming back to the physical retail. And the consumer segment which Titan caters to, like mid market or premium, they don't seem to be affected by whatever macro headwinds we are hearing about, inflation, interest rates going up. It appears that that's hitting more to the bottom of the pyramid, where food, energy is a large part of the monthly spend. As it is, their discretionary was low, and which has further shrunk. But Titan finds itself in a good space where their consumer segments are still sitting on the savings or perceived whatever wealth by stock market, etc., and they are spending.
Yeah, and the point is the beat was on all counts, right? It's not just jewelry which is driving the business, but this quarter I thought watches as well did reasonably okay for itself in the quarter. I mean, and on the back of the numbers, the watches and wearables piece also did well. And you already told us that October was very good for jewelry. So tell us, how has been the spillover in all the segments in the month of October for what, and therefore it could give us a sense of how quarter 3 could be like.
Yeah, so Neeraj, even continuing with my last answer, that what we are finding across categories, that the premium goods are doing far better in terms of growth rate compared to the entry level. Like say, if in watches you talk, then Titan, which are premium watches, or Helios channel, where we have international watches, they are doing far better compared to entry level, say Sonata, or lower level fast track analog. Same thing we are finding in jewelry, where the high value studded, high complexity design gold jewelry, they are doing far better than entry level jewelry. They are also doing well, but we can see definitely growth rate differentials between the high end and mid end kind of thing, between the bottom end of the offerings which we have. We found the first month of the quarter 3, we have started on a strong wicket. Already last year, quarter 3 was very strong because of the spillover demand, pent-up demand, and the festive season has started very well. I would say even beyond our expectation. We were hoping to grow, but we have grown handsomely. Jewelry about 19%, watches and eye care 17% each. And in watches category, I think our wearable segment, which we have been talking about for last 2-3 quarters, that we are ramping up our game, we are putting right resources, we are carving out that as a separate business unit with all its focus that it deserves. And I think that has started playing out, and that's growing very, very rapidly. Simultaneously, also our international plan, which we have been talking about for some time now, is kind of taking shape, and that's also helping jewelry segment particularly.
Very interesting. So a very strong October, and arguably a marriage season, which will probably see some pre-buying and actual buying, would augur well, therefore, for quarter three, ceteris paribus.
We also hope so, Neeraj. While in quarter one and quarter two, wedding has not that much worked for us, or that's not the main growth lever for us. It remained just the way it was for Tanis. In quarter three, certainly we hope that wedding will do well for us. As well as, in quarter three, generally there is a NRI travels back to India, and, normally in December, January. And that also we have seen in past that helps, and for their wedding pieces also, they come and they buy in India. So that phenomena also should work out. The starting of quarter three is well, so we are very, very optimistic.
Okay, you've given, for the quarter, you've given inventory, rather the margin commentary, so to say, but without trying to focus on the quarter per se, would you reckon, Mr. Sonthalia, because you're best placed to answer this, that looking at the economies of scale, looking at all the other factors, and I'm presuming that while you might get some inventory gains in diamond previously and this time around will not come in, on an average for the year, these would even themselves out. You reckon that these are the numbers, or these are the margin levels that you reckon you could have as an annualized number without too much of an effort, or would you want to improve upon these?
So on a medium term basis, we have talked about for jewelry segment, 12 to 13% EBIT margin or operating margin seems to be a decent margin to aim for. Competitive intensity is high in the industry. We know that existing national players, regional players, all are upping their ante, and they are also expanding. And we need to be mindful of that. While Tanishq continues to enjoy its premium positioning, but one has to have pretty balanced so that customers are willing to pay that small premium to us for our experience, design, trust, everything else which we stand for. Similarly, if you talk about watches, we think 13 to 14.5% kind of is the range which we should be targeting. And for eye care, mid-teen, we have guided mid-teen. An idea at this point of time, Neeraj, is to focus completely on growth, market share gain, customer acquisition, and deliver a stable margin profile rather than focusing too much. So investing back into the business, in the brands, in the network expansion, and providing the right value to the customer.
Okay. My final question. I know that you refrained from giving any major guidance because of the base effect for the revenue in the corresponding quarters, and I appreciate that. As you see or analyze the data for the last few months / quarters, and as you plan out going ahead, would you reckon that, Mr. Venkatraman has been talking a lot about how your data and customer data and trying to mine that is helping you increase the revenue count per store, per customer as well. Would you reckon that, because you're a large company now, would you reckon that a larger portion of the growth over the next 3 years would come in from store expansion? Or would you, and I know it will be a mix of both, but I'm just trying to understand between the two, would the larger part of growth come in from store expansion, or would the larger part of growth come in from mining each customer per store and therefore increasing the revenue per store?
You see, for the growth, I believe there are 4 or 5 layers which will ultimately help us to deliver what FY27 vision which we have put forward to in the last annual investor meet. One is, of course, the like to like, which we talk about, 10 to 12% has to come from there. Otherwise nothing works out. And then another 3 to 4% we think from the new store expansion. And on top of that, then these are the layers of further mining, the omni, the international, and which kind of helps us push towards 20, hopefully. Not every quarter, not every year, but over a 4 or 5 year horizon, which we have put in, we think that we can deliver.
Great. Okay. Mr. Sonthalia, we've got 10 minutes and I think that is up now. So I'm presuming I assume you've got other appointments to keep. So we'll leave you on that. But thank you so much for talking to us, and all the best for the quarters ahead.
Thank you, Neeraj. Thank you very much. Take care.
And viewers, thanks for tuning in to this edition of the earnings conversation with Titan.